Alright, so the structure is bearish looking downtrend. We have a big spike down and we have what looks like spike and a channel pattern. We have a second entry short forming right here off the big key entry point, but the signal bar is gigantic. So I cannot take the entry based on how big this signal bar is and how congested the EMA is getting. And you guys can see price is breaking up my channel. Since we had such a massive spike down and price continue pushing lower, I keep looking for some decent spike and a channel, nothing that would fit really perfectly, but I cannot deny the bearish structure. And you guys can see we just had a double trap form. First entry short, pullback, second entry short, too big, EMA exactly in the middle of these bars. Now we form a double trap because everybody who went short too early, they got trapped, and everybody who went long too early, they got trapped again. But I cannot take it as well because it is exactly EMA in the middle of these bars indicating congestion, and I need to stay away out of this congestion. So even though the bias is bearish and I have what looks like some decent key entry point, and I'm going to take a high probability setup at this key entry point, I cannot take these entries because they're too congested and I need to be patient. The spike and a channel pattern is continuing, and this is pretty typical. When you get first steep bearish move down like this, price cannot keep working lower. Under such a steep conditions, no market needs to pull back and come into balance. For that reason, when you see a steep move down like this and a small little consolidation, the second leg is generally going to be flatter and the trend is going to be flatter, thus allowing you to capitalize on the entries of the key entry points. And this big move down was caused by a bad CPI numbers. Inflation is getting worse. So I'm sticking to my overall bearish bias. I'm drawing these shortened trend lines because I want to see breaks of these bullish uptrends, new extremes, and then I want to go short. Because since this is a bearish structure, bearish downtrend working lower, I'm looking at these bullish trends just as a corrections. I want to see them play out. Once these bullish trends, these corrections play out, I want to still look for resumption of a trend at the key entry points, either at the trend line or at the exponential moving average. Price just broke the downtrend working lower, and according to trend line rules, I'm still expecting for price to create a new extreme of the downtrend. So I'm looking for first entry long, second entry long failure below exponential moving average. We were in a strong congestion here. We finally broke out of that congestion. We can see that the price is reacting more bullish than I would like. But given the overall bias and given that this is the first break of this downtrend, I'm still expecting for price to push below EMA. Of course, if we reverse higher, then I'm going to switch gears. But if you're going to push below EMA, I'm going to take a failed second entry long. Alright, so price get a new high where I reset the count and we have a first entry long, push below EMA, second entry long, failure. Now any second entry long that goes against the overall bias is treated as failure. Now you guys can see the second entry long failure right now triggered and it looks like it's going to work like a clockwork. At least my read was good. But I didn't take this entry because price didn't stay below EMA. It actually pushed strongly higher on this big bullish bar right here. And when this failure appeared, this is way too big now. It's getting way too stacked. The momentum is not there. I would want to see price to push below EMA and not work sideways like this. This is entire sideways momentum. So even though this technically worked, I decided to wait here. We didn't even trigger below this bearish bar on first try. We actually stalled a little bit. And there was a trigger below this inside bar. So multiple reasons that are forcing me to stay away from this trade. But price is still pushing lower. We still need to get new extremes. So I wouldn't be surprised if we push lower. So this was the first decent high probability setup for today combined with this double trap. All right, traders, I'm going to take lower high after failed second entry long. And I kind of treat it as a breakout pullback of this small little congestion. You guys can see multiple bars stacked, EMA in the middle of these bars, and this is like a sideways area. And we broke lower, we pulled back, tested the EMA, tested the trend line, and lower high, big bearish reversal bar, confirming the breakout pullback and confirming the failed second entry short. And we got filled. Perfect. So I'm gonna tighten the stop loss because the runner right now is just a gravy, it's just a bonus. Our scalp was made and anything that we get out of this trade is just a bonus. We still need to get new extreme for the downtrend, so the context is still very bearish. All right, so I've been sitting here just with my one single trade, this low high, because market just didn't really pull back to EMA enough with the two-legged pullback. We had a second entry short right here, but it was far away from EMA and the bullish uptrend was still in play. And right now there was just a first entry short here, and right now we have a first entry short, second entry short, but it's above EMA. It's not really confirming the key entry point. so I'm not really seeing any opportunities to enter. But bias is still very strong, bias is still down. You guys can see I extended the downtrend because once I see price pushing lower like this consistently, a lot of small bars pushing lower, this is where I have to judge the entire structure, and I have to extend my channel from this shorter term spike and channel with the break and new low to this bigger spike and a channel with no break. So right now this downtrend is still in play. I'm still looking for two-legged pullbacks at the key entry points, and I'm treating every bullish trend as a correction that is eventually going to play out. And once we push below EMA, that's when I'm going to take short and I'm going to capitalize on traps. The bias is still very bearish, and we have a first break of this major spike and a channel pattern. So I'm expecting for price to push below EMA and give me a failed second entry long, because I'm expecting new low to be formed for this major downtrend according to price action rules. This bullish correction played out. Even if I draw a slightly wider uptrend, it played out. So right now I'm just looking for price to give me signs that I'm safe to sell. Once price pushes below EMA, confirms the bearish momentum, and then I can take a high probability short setup. Price created new high, first entry long, pullback, second entry long, failure, but there is no trigger below the big bearish bar. We didn't really touch the exponential moving average as I would like. So for that reason, I'm not going to take this trade even if we get the trigger right here. There's still a bullish bar follow through, which is not great when you want to enter below this bearish bar. But you guys can see this is how you approach a bearish downtrend. You're sticking with the overall bias. You treat every bullish trend as a correction, and you know that it's safe to sell once price pushes below EMA and confirms the bearish momentum. We still could get something like a second entry short at the EMA because we still need to reach new extreme for this downtrend. Preparing my limit order as I'm going to enter a second entry short, first entry short, second entry short of the exponential moving average.
Order filled.
Right, so we got from, so I'm going to move my stop loss one tick above the signal bar, and I'm gonna go for 10 tick target profit. 7, 8. It looks like we almost reached 8 ticks, but I'm still trusting this setup. 2 legs up, first entry short, second entry short at the exponential moving average. This downtrend still needs to get new extreme, but mainly the bigger bias is bearish, and the bigger downtrend needs to get new low as well. Big bearish reversal bar, 2 legs up, second entry short at the EMA. I'm taking a chance here. Nothing is 100%, but I like taking this trade because it is following the rules. Big downtrend is new extreme, second entry short at the key entry point, and let's see if we can get the scalp here. All right, so we bounce off my exit order, and we're reversing. This is not really what you want to see. I was contemplating going for 8 ticks because the volatility slowed down substantially, but I'm going to keep it for 10 and see if we can still manage to get the scalp here. The bias is still very bearish, but you never want to see price bouncing off your order and then reversing higher. Come on, and we got out. Perfect. So I'm going to tighten the stop loss because anything right now, once again, is just a bonus. My main portion is scalp, and the runner is just a bonus. So in case market plummets down lower, and I want to be a part of this, I don't want to miss that move. I want to keep the runner here. All right, so it looks like our runner may get stopped out, but you guys can see how powerful the two-legged pullback setup is. You're just waiting for a two-legged pullback. Also, the shortened uptrend played out with the break in new high, and this is what I saw. First leg up, pullback, second leg up, two-legged pullback to key entry point, or you're capitalizing on a failed two-legged pullback that goes against the trend. And if second entry long is going to be a failure in a strong bearish structure, and any second entry short is going to be considered as a high probability setup. Of course, if it sets up good, it cannot be congested. The shortened uptrend needs to play out preferably, and this was the perfect mixture. Also, the signal bar is great. Notice it looked very bullish, and at the very end of the bar, once the bar was closing, it strongly reversed down. Big bearish stim at the top because the bar looked very bullish and reversed lower looking very bearish. So right here, you guys can see we took 10 ticks on both trades, and hopefully we can get some nice run, although price is really hovering around closely. All right, traders, market just reached a new low for this major downtrend. I'm gonna wrap it up with my 2 trades. This was the second entry short right here, and then this lower high confirming a failed second entry long and kind of like a breakout pullback You guys can see congestion right here, breakout, pullback out of this congestion. You have to understand that once we broke lower like this after a bad CPI, this is very strong bearish downtrend, and generally there's going to be a follow through, but the second leg is not going to be so steep. The second leg is going to be a flattered pattern. For that reason, there's a spike and a channel pattern continuing, and at that point you're just looking for these bullish corrections to play out and wait for price to push below EMA to confirm the overall bearish momentum. You guys can see there are a couple of decent two-legged pullbacks or lower highs, but there's always something wrong with them. Take a look at this congestion, EMA in the middle of these bars, stacked next to each other without any room. Same thing up here. This is just EMA completely flat in the middle of these bars, 20 bars stacked just going sideways next to each other. And this is a lot of times these congestions, they will trap a lot of traders, even though they think they're taking a proper two-legged pullback. You have to be patient and you have to wait these horrible areas out, because it works still in your favor, but it is really unnecessary to be taking these losing trades. It is much better off to wait for price to break out of these congestions and give you a more decent high probability setup. The bias is still overall very bearish. If I'm going to zoom out like this, we can still see the structure is very bearish. You may get a new low, but price can keep continuing pushing lower and lower, because at some point eventually the downtrend is so strong where price is going to keep creating new extremes after new extremes. So I'm going to wrap it up and I'm going to see you guys in the next one. Take care, everybody.